Yeah, I love President Trump, boy. That's right. Democrats, I voted for Trump. Does that make you mad? You want to slap me? Call me mean names? I don't care. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I got a big fat chew in my mouth, and I'm a Trump voter. Yeah, I like fascism. And I'm going to review Kamala Harris's, Vice President Kamala Harris's tax return. And I bet there's so much fraud in there. Oh my God. Welcome back to Strongman Personal Finance. Now, I just did a video doing Mr. President Joe Biden's tax return. And now we're going to look at Kamala's. And you know what's funny? I can tell right off the bat that Kamala and her husband Douglas Imhoff, they make way more money than the Bidens, and they're way wealthier. By far. Leaps and bounds. Now, I've already explained the 1040, roughly, in another video with Joe Biden. So go watch that one first, because I don't want to go through everything again. But we're going to go through this. So let's see. This is the Form 1040. This is your, the primary tax form where you compute you put all your income on there. You put all your taxes that you do. Taxes you've paid, and then you get your final tax liability or refund. Now, you don't always get a refund, ladies and gentlemen. That's on how the tax system works. If you're lower income, you usually get a lot of credits, which is why you get a refund. But as you move up the income ladder, you actually pay taxes. And sometimes you owe if you don't pay enough throughout the year. Okay? Why did you get a refund, Mr. Bale? I don't understand. So, right off the bat, when I look at this, I can see that they're very wealthy, and they're very tax efficient. Why? Well, number one, I see wages, salaries, and tips at the very top. This right here, $380,000. This is from your job. You're going to work, blah, 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 blah. And it got a little bit of interest, which is normal, especially for people that make this much money. But as you can see here, I don't see any dividends. I don't see any IRA distributions. And I don't see any pensions or annuities. And I guess they're not taking Social Security yet. But you can see, if you're a tax-efficient investor, you won't have any numbers here, okay, on the taxable side, because you put your money in tax advantage accounts like the Roth IRA or Roth 401k, and when the money comes out, assuming you meet all the qualifications, 5 years, blah, 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 you don't pay any taxes on it. This is where I want to be. I want to be more like Kamala than I do Joe Biden in retirement. Now, the first thing I noticed is that there is one tax inefficient thing here. They have a capital gain or loss. Now, capital gain is basically any property you've held for investment or whatever that you've sold for a profit. So, for example, if you buy a Robinhood stock and it goes down 60%, well, you're not going to have a capital gain. You're going to have a capital loss. But if you bought Tesla and then you sold it at a massive gain, that gain eventually flows through to this line 7, this $319,108. I don't know what they did. I think I heard they sold a house. We can actually go look in a second. But they have a pretty significant capital gain here, which you don't want that necessarily, okay? And if you sell an IRA or 401k, you don't get this, okay? Tax advantage accounts. Now, here's how I know they're freaking rich, okay? Other income from Schedule 1, line 10. This is where all your business income flows through. $969,000. So, yeah, they don't make a lot of money in wages. Well, they do, but compared to the average person. But the vast majority of their money comes from businesses, which that's how you know someone's making buku money. And their total income was $1.6 million. Now, if you exclude this capital gain, which may have been a one-time thing, their income is $1.3 million, which is pretty freaking good. Then they have adjustments to income. That could be IRAs, that could be deductible part of self-employment tax, stuff like that. And here we have their AGI. Now, below AGI, $1.6 million, they took itemized deductions. You can itemize or you can take the standard. Go watch the Joe Biden video. And their total taxable income was $1.6 million after all their deductions. So, they're definitely in the highest tax bracket, I can tell you that. Here's their total tax liability, but there's also additional taxes that come in. You got self-employment tax, you got this tax and that tax. So their actual total tax was $523,000. Then you subtract out payments. So they paid some money from their W-2s. They paid estimated payments, which you better frickin' pay. If you have a business,
you got to pay estimated payments. For example, I just paid $2,000 to the federal government, just directly paid them, and I paid $275 to the state of Virginia yesterday for my quarterly taxes because I have businesses. I have YouTube, I tutor, I have book royalties, lots of royalties, and all sorts of stuff. So their total payments were $498,000, but they owed a total of $523,000. So they actually owed $24,000. Nice. So let's go dig in a little bit more. So let's see. Business income from Schedule C. So your business income, if you have business, it flows into this form, the Schedule 1, and then it goes to your 1040. And then they also have a ton of income from real estate, royalties, partnerships, S-corps, or trusts, which we'll see in a second. So let's go down a little bit. Additional taxes, household employment tax, because they have like a nanny or something. Additional Medicare tax, net investment income tax. Yeah, Jeremy and Kevin pay that. And let's go down a little bit more. Payments, general business credit. Okay, $22. Let's see. Blah, 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 blah. I want to see what their businesses are. Where are your businesses? Okay, before we get to that, we'll do itemized deductions. So they paid a ton in taxes. State, local property taxes, stuff like that. But they can only deduct $10,000 because that's the current law. Now, the Democrats want to change this because they can deduct more because they live in high-tax states. But as of right now, federal law only limits you to deducting $10,000 of state and local taxes. And then you have interest they paid. Let's see. Mortgage interest. They paid $25,000. They got a big mortgage. And they gave $22,000 to charity. Okay. Oh my God, who do they donate to? Okay, they got some interest, dividends. Well, they got no dividends. Let's see. Nothing exceptional. Wells Fargo. Okay, it's their bank. Profit or loss from business. Kamala Harris, writer. That's gonna. You would think that it would go through Schedule E, with royalties, but whatever. So here they have. So she had gross sales of $452,000 from her book, I guess. And her only expense was commissions and fees. Did she have any home office expenses? No. So she had a profit of $386,000 as a writer. It's a lot of money for books. I made $100 last year for my book. Capital gains and losses. Let's see where that big capital gain came from. So it looks like they had a long-term capital gain, which is tax efficient. But where did that come from? Sale of 260 Clara Street. Okay, so they sold a house. Okay. That's where the entire capital gain came from. So they sold a house. So they bought the house in 1998. They sold it in 2021. And they sold it for $860,000. So, yeah, they got a $319,000 gain. Okay. Let's see. Income from partnerships or S corporations. So they're members of two partnerships. DLA Piper LLP and Venable LLP. And from these, they made a total of $582,000. Now, I don't know what these do. And is it the taxpayer? It doesn't say whose businesses they are. I mean, it could be either one of them. But yeah, they made a ton of money from partnerships partnerships. So a partnership is just two or more people working together. And then you can be, you can do LLC or LLP or whatever to protect yourself from lawsuits. But if you and somebody else start a business together, you're a partnership. You don't have to do anything special. That's all it is. So they're members of two different partnerships, DLA and Venable. And whatever they're freaking doing, they're making a lot of money. I'll tell you that. So that's okay. But this really isn't a super complicated tax return. I've seen way worse, man. Oh my God. Let's see. Income from pass-throughs. Yeah, this breaks down more about the money they made from partnerships. Self-employment tax. So if you have a business, you have to pay self-employment tax. I pay self-employment tax because I have a YouTube business and a tutoring business. Okay, foreign tax credit, whatever. What is that? Are you buying foreign stocks, boy? General business credit, $22. Wow, let's see. Holy crap, this return's long. Household employment taxes. Total cash wages subject to Social Security. I was going to say like a maid or something. I don't think Kamala has kids. Yeah, they paid somebody $16,000. Interesting. Let's see, what is this? FUTA. Oh, you got to pay freaking so this is like a business expense. So if you have an employee, you have to pay federal unemployment tax. There's a bunch of additional expenses you have to pay for employees. It's not just your salary that your employer is paying. You got to pay the employer's part of employer's part of Social Security and Medicare. You got to pay federal unemployment tax. You got to pay potentially state unemployment tax. So many freaking taxes out there. It's ridiculous. Okay. Additional Medicare tax. You make a lot of money, you pay more tax on Medicare. Net investment income tax. I talk about this with Jeremy and me, Kevin. They got to pay this when they sell their freaking stocks. Let's see. Net investment. Okay, income tax. Let's see. U.S. and foreign source income. Where did it come from? Looks like they have no money coming from foreign. Okay. Allocation of itemized deductions. Yeah, there's really nothing special about this. I mean, you can see, here's the wages. So Kamala made $215,000 from the Senate, and her husband teaches at Georgetown and made $164,000. Wow. Okay, well, let's see. Blah, 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 blah. They paid, this is their quarterly taxes they paid. Merrill Lynch. These Merrill Lynch. Let's see. Yeah, there's nothing really exciting about this. Let's see. Let's see what they donated to. Okay, cash contributions. This is where they donated for their charities. Bet to Zach Deck. CSNU Arts and Communications Fund. DC Central Kitchen. Howard University. Oh my God. Matthew Silverman Memorial. The Jewish Foundation of Greater Los Angeles. You see that, Mike Stathis? The Legal and Aid Society of DC and University of Southern California. Wow, very exciting donations there. So, yeah. So, in conclusion, there's a lot of crap on this tax return. In conclusion, the Harrises definitely make way more money than the Bidens, and they're way freaking wealthier. And you can tell because there's a lot of money in the wages part, but most of their money comes from businesses, which is where you want to be. So that's it. Nothing really exciting. They're part of two partnerships. Kamala's got a writer business. And that's, yeah, nothing really crazy. Anyway, that's it. Like, subscribe, tell your friends about me, and I'll see you later. Cheers!